Welcome back. Saving money, again, a big thing, and also finding the right person to work with to help you do that. That's kind of what we're hitting on here today. Charles Tobin is back. Clean shaven, looking good.
Yeah, thank you.
Yeah. Must be my dated compliment on everybody looking good. Yeah. You know, I don't know. Must be going to the gym. I'm using that membership a little bit. So that's right. I don't know. Anyways. Charles, you know, we're here. Boyce actually mentioned a few seconds ago about saving money on insurance. And, you know, you've been able to save a lot of people money on insurance. And what are some of those, you know, easy things people can look at to find out if they can save money?
You know, it kind of goes along with, you know, having someone look at what's going on with your finances and whatnot, or your insurance for this case. You know, do you have a rental home, or are you insuring it properly? Just if you're insuring things properly to begin with, that's what I look at. I'm like, so what, I always ask the questions, you know, what do you currently have? What's, you know, all that stuff. So.
And so I mean, it's kind of understanding what you need and what you have. And then is that element kind of like in mortgage of shopping it around?
Yeah. A lot of people call for rate, but I take that as an opportunity to say, well, why are you shopping rate? You know, what's going on with your current insurance? You know, what do you have? What's your family? What's your recreation? What's your occupation? I find out all those, you know, important information and kind of cater a policy and coverage to what they need.
So, you know, a lot of people may call, and that people are buying more investment properties now, at least the people who can afford them. Mm-hmm. And, you know, that's a place with investments is a place where people really do want to save money. I mean, it is kind of a dollars and cents game at that point in time. What do you do to help people with investment properties who are playing that, you know, real money-saving game?
Well, I educate them first. You know, if you own let's say you're moving out of your house and you're going to buy up and you're going to rent out your old house. That seems to be kind of common these days.
Which actually means you're buying the same price house, but you're just getting a nicer one.
That's right. It's weird how that works out. But, yeah, people don't really know that they need to change that policy around that they're moving out of to a dwelling policy. It used to be called the dwelling fire because fire used to be the only coverage that was on there. Like if it burned down, that's your only coverage. But now they've broadened it to include theft and wind damage and all that stuff. So you need to change your policy around and get it correct because you could run into some problems if you had a loss.
And that's versus, say, a homeowner's. The actual homeowners. We're talking. It's on the house, not maybe on everything that's inside of it. Or so,
yeah, I guess a little bit about what it is it just covers the structure. You can now add liability coverage on there, but most companies you don't really need to because you can extend it from your primary home. You don't need personal property coverage because you just moved out of there. You probably don't have anything left there except maybe a lawnmower, maybe to go back and mow the tenant's lawn occasionally, but I doubt it. So there's
I doubt. Well, hey, it might just be a good place for storage. Hey, rent my house. By the way, that 1/4 of the garage. I've seen this.
Yes,
I've seen it where they section off a piece of the garage of the house they're renting, and that's their new storage unit.
Yeah. So you don't need to have those coverages on there per se. It's just, you know, getting the structure covered, and then having your tenant get renter's insurance for their personal stuff because sometimes they think that you're covering their belongings.
What an easy thing to require a renter to get or ask them to get. Yeah. I mean, it's like $10 a month or something like that.
Yeah, I just ran into this with a buddy of mine that his tenant had some things stolen out of their vehicle. And, you know, normally if the normal homeowner's policy, it extends to your vehicle with all the stuff you keep in there. So they were wondering if their landlord had coverage on their house for their belongings that were stolen out of their car. I called them.
But you don't know. People don't know.
I know. It's so I actually called the tenant. I said, hey, look, his policy does not cover that. You would need a renter's policy to cover your belongings. And they were just like, wow, I didn't know that. You know, and so just kind of educating people like that and letting them know what they need to have in place to protect them.
A lot of people really don't know what they should. I mean, speaking to Boyce about, you know, adjusting W4s and just making sure your locks are protected with the Glen and just hearing about the simple things that people can do that I don't know if they don't know. And we've talked about on the show how everything is so hyper specialized. It's hard to know all these things. It really is difficult.
It is.
And finding those teams of people to work with can actually end up saving you money more than costing you.
Yeah. Yeah. So I also wanted to finish up on the dwelling policy. That can be for a condo or a home, whatever you're going to rent out. And it's usually the kind I'm talking about is for like a long term, like a 6-month lease or a year lease, not the, occasional vacation rental that you might see in Hawaii or other vacation towns. Those are a completely different, policy that I'm not talking about today. So I just wanted to clarify that in case people are thinking.
And so this just covers the house, the structure, the wood and the drywall and the roof.
Yep.
The brick.
And you'll want to make sure you'll get some kind of extended replacement cost on there, which would account for if you had a total loss and you needed to get rebuilt and you didn't, have enough coverage. The extended replacement cost would kick in and pay for the difference.
What if it's vacant? What if nobody's living there? Is that kind of the same
that's a big
thing?
One. That's a big one these days.
Because people are trying to sell their house. They've moved. That becomes. You look at the houses on the market. A lot of them are vacant.
I've opened a lot of people's eyes to that. That policy, vacant policy, is one of the most expensive things you can buy, and you get nothing out of it. I literally
unless the house burns down.
It's just because the insurance company, you're going to run out of coverage. I think it's 30 to 60 days after you move out, and it's completely vacant. So you need to get a special policy called a vacant policy, which only a few companies do, and it's in the ballpark of $300 to $400 a month to cover that thing. Wow. And it's just covering the structure, and it's really limited coverage too. So.
And the reason it's more expensive is,
higher risk.
Pipe burst, nobody's there to see it.
No one's there, or maybe they turn the heat off, and they turn the water off, and that leads to problems. And so it's a definitely higher risk, and that's why they charge a lot for it.
Well, Charles, thanks so much for joining us. Because I think that's it's like a transition policy type thing. Mm-hmm. And people really can go through their personal books or their bank statements, and this is one of those things they really don't need if they're carrying, I guess, another house or owning another house. Yeah,
and you can cater these policies to whatever you need. So you're right.
Well, thanks again for joining us. You're going to stick around for a few minutes. Heather's going to come on, and we're going to talk a lot about people even knowing what to do. How can people take a little bit of personal responsibility and be realistic and with living within their means? That was Charles Tobin. I'm Ben Brashen, and Heather Moore is going to join us here in just a few minutes after our break. You're listening to Brashenomics.